Good afternoon and welcome to the BioTech Growth Trust PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to partner at OrbiMed, Josh Cullen. Good afternoon to you.
Good afternoon, everybody. Thanks for taking the time to speak with me. I'm excited to tell you about the BioTech Growth Trust and give you updates. So a bit about myself. I'm on the right here. I'm a partner at OrbiMed, been at the firm since 2021 and was named a co-portfolio manager of the Growth Trust, the BioTech Growth Trust in 2023. I've been an investor in the biotech and pharmaceutical sectors since 2004, so have almost 22 years of experience investing in the space. My partner, Jeff Shu, has been at OrbiMed since 2002 and has been a portfolio manager of the trust since May 2005. He as well is an investor in the space with over 20 years experience in the sector. So a bit about our firm. OrbiMed is a global healthcare dedicated firm with over a quarter of a century of experience investing in the healthcare and predominantly the biotech sector. Total assets under management as of the end of September was 19 billion. You can see we have a healthy private equity business. We have a structured finance business, a royalty business, and we have a public equity business, which the BioTech Growth Trust and its sister trust, the Worldwide Healthcare Trust, are a predominant amount of the assets. There are 148 employees at the firm. We've been hiring in the last 18-24 months, as you can see. A significant amount of investing experience at the firm, and 34 of my colleagues have advanced medical and scientific degrees. So a bit on historical performance of the trust since its inception. You can see how the NAV has appreciated over time with the blue line here. And you can see how that compares to the gray line, which is the benchmark for the trust, the NASDAQ Biotech Index. Now you can see that the trust had significant outperformance through 2021, but there was a bit of a drawdown, significant drawdown during the last few years. And I'm going to go over some of the reasons why that drawdown occurred and why we think there is a significant investment opportunity today for you in the trust. So this is the performance of the trust over the last 6-month period. Our fiscal year starts in the end of March, and you can see that the trust on an NAV basis is up 37% relative to the biotech NASDAQ Biotech Index, which is up just over 10.5% through, again, that 6-month period, the end of September. Can inform you that October was also a very solid month, and you can see that in the published NAV numbers if you check online. So positioning for the trust and what led to some of the outperformance in the last 6 months for us is the trust has positioned itself in small cap biotech stocks. And here we gave a breakdown by market cap of small cap stocks, which are under 2 billion. A second bucket of stocks, mid-cap stocks, which are 2 to 10 billion in market cap, and large cap stocks, which are over 10 billion in market cap. You can see how the trust was positioned relative to the benchmark index on the left here as of March 31st, and you can see in the upper right hand corner of this slide how the small cap exposure and mid cap exposure increased while the large cap exposure decreased during that time period for the trust. So we invested in small cap names, and frankly, small cap names appreciated during that time period, which led to a bunch of the outperformance for the trust. You can see the graph here, we just equally weighted the small cap names in the benchmark, the mid cap names in the benchmark, and the large cap names in the benchmark, again, by the market cap buckets. And you can see the 58% performance during that time period for all the small cap names. So, I mentioned the drawdown that occurred during 2021, and I wanted to just articulate how big a drawdown this was relative to the general markets. But on the flip side, we'll articulate why we're so optimistic for a recovery, which we think has just begun. So the top line on the graph here is the S&P 500. You can see here that the S&P 500 over the last few years has been up almost 85%. This is a good representation of the general equity markets. The healthcare component of the S&P 500, which is the next line, the dark line here, is up 22.5% during that time period. So it's underperformed. Healthcare as a whole has underperformed the general market by 60% over the last few years. Small cap stocks, which are represented in the lighter blue line by the Russell 2000 index, an index of 2,000 smaller cap companies, is up less than 20% during that time period. It's underperformed the general markets by almost 65%. And in the green is a line of the biotech stocks in the Russell 2000 small cap index, and those stocks as a whole have underperformed the market by over 116%. So significant underperformance for biotech during the last few periods. However, we think the fundamentals in the sector have been strong, and I'll go into some of the reasons for the underperformance in the next few slides, but we think that this sets up for a rebound and an ability for biotech to catch up to the rest of the market on a performance basis. So why do we think biotech is attractive? This is a graph of the biotech companies. This is the median of the biotech companies on a market cap to net cash ratio. So it's an unobjective metric, but we just wanted to show how valuations, or the median valuation in the sector, has changed over time. And as you can see in the bottom right-hand side of the slide, valuations were at their lowest points ever from 2022 to 2024. They have started to rebound a bit, but are still significantly lower than they've been historically. They're lower than they were during the dot-com bust of the early part of this century. Later that decade, the great financial crisis. Also in the 2016 time period, when Hillary Clinton was running for president on a drug pricing reform ticket. And even during the COVID pandemic of 2019 and 2020, we have not seen a drawdown in biotech this large. Now, we did start to see a nascent rebound in the space in 2024. However, this was muted when the Trump administration started putting in tariffs, as well as we saw RFK Jr. named as the head of Health and Human Services. And there was a bit of political uncertainty, frankly, in the sector, and that led to a bit of a retracing. However, we think a lot of the overhangs in the sector have been removed, both political, both economic from an interest rate perspective, which I'll talk about in later slides, and we've seen an increase in M&A activity in the space, which we believe all will serve as tailwinds for the sector recovery. So this is another way to look at valuations. Again, from the sector, the graph on the left, we've graphed the net cash on the balance sheet of a biotech company relative to its market cap. And the graph on the left shows the companies that are trading at a valuation less than the cash on their balance sheet. During the peak time of this, or during the lows of the biotech sector, this approached 30% of the companies in the sector. Now, there's been a recovery and we're back to 10%, but we're still not at normal levels for the sector, as you can see graphed all the way back to the turn of the century. The graph on the right shows net cash on the balance sheet and the number of companies. So as opposed to the percent, the physical number of companies that were trading below cash on their balance sheet. This number was in excess of 150 companies during the lows of the market. It even approached 160. We are now getting back to more normal levels, but still above normal levels that we've seen throughout the earlier part of this century. So one of the reasons that the biotech sector was under pressure during the 2021 and 2022, 2023 time period was a rise in interest rates. So you can see we've graphed here on the top graph interest rates, which the 10-year interest rate, 10-year yield shown in the black line, and you can see that it increased from 2021 through 2024. This increase occurred as investors anticipated that the Federal Reserve was going to have to raise interest rates, short-term interest rates, to combat inflation. And the line in the green is inflation. And you can see there was a rapid rise of inflation up to 8%, and the Federal Reserve, and you can see this in the graph on the bottom, you can see the lines had rate increases through 2022 and 2023 to lower inflation. And their stated goal is to get inflation around 2%, and they have been successful, and subsequently the 10-year yield has stabilized. Now, why are interest rates important for biotech? Well, biotech is forward-looking. As an investment. We invest in companies predominantly that are development stage, and we're projecting out revenues and earnings for a company a few years out. And as we discount those future cash flows for the company, the interest rate that we use, or the risk-free rate, the higher that is, the less those cash flows are worth because they're discounted more. So the lower the rate, the lower the interest rate, the lower the risk-free rate, the higher the value we can ascribe to those future cash flows. And we believe that future rate cuts by the Federal Reserve will serve as a tailwind for the biotech sector because those cash flows will be fundamentally worth more. So I talked about some macro aspects. Now I'd like to talk about the fundamentals and some investment themes that exist within the biotech sector. And this is really why I get excited to go to work every day. And I think this is part of the reason why you're looking at the trust potentially as an investment. So here are some key breakthroughs that have occurred in the biotech sector year to date. Now, these are just breakthroughs during the 2025 calendar year. I've listed a few that I find exciting. There are certainly others that have occurred, but I'll highlight a couple for you. The top row rather, with the company United Therapeutics, developed a product called Tyvaso for the treatment of a chronic lung disease, idiopathic pulmonary fibrosis, or IPF. Their drug, which is an inhalable prostacyclin analog, showed a benefit in lung function on top of background therapy in a trial compared to a control, a placebo control, over a 6-month trial. Now, why is this exciting? IPF is a chronic lung disease. This drug helped people breathe better. Current approved drugs only slow the decline of the disease so that breathing function decreases slower. This actually improved the breathing in the patients, and this is the first time we've ever seen that. And we are hopeful that this drug will be on the market available to patients for this disease, IPF, in 2027. The second row, a drug, brepocitinib, was developed by a company called Roivant for the treatment of dermatomyositis. This dermatomyositis is an autoimmune disease, so it's the body attacking itself. It affects both muscle function, so patients develop weakness in their muscles, as well as skin disorder. And this is the first oral therapy and the first drug over a 52-week placebo-controlled study to show a benefit in both symptoms of the skin as well as symptoms of the muscle during that time period. It's a once-a-day drug. It's easy to take, and it addresses an unmet need. So it was super fulfilling and exciting to see these results. And again, we believe this therapy will be available for patients sometime during 2027 after they file for approval and the FDA reviews it. So on the next slide, I'll share some of the drugs that were approved by the FDA in 2025. And these are new therapies. Developments are exciting, but ultimately the federal regulators need to approve a drug so that it could get into the hands of the doctor to treat the patients that are in need. I'll highlight one of the drugs here that was approved. We can go to the second row. Your eyes can go to the second row here. Yeztugo was approved by Gilead for the treatment of pre-exposure prophylaxis to HIV. This is the first shot that you can take every 6 months to prevent an HIV infection. In fact, in the clinical studies that were done, infections were prevented in over 99% of the people that took the drug during that period. Well, it is a drug that's injected every 6 months, and you have to go to the physician's office to have this injection. You can think of it like a vaccine. It's not technically a vaccine, but you can think of it like a vaccine for HIV prevention, which is really important in high-risk individuals. Another drug on the third row that was approved by the FDA this year was Journavax. This is a drug that was developed by Vertex, and it is the first non-opioid oral drug for pain, specifically moderate to severe acute pain. So when you have a surgery, typically you have some pain after during your recovery for a short period of time. Historically, physicians have prescribed opioids. However, at least in this country, I'm in the United States, there's been a significant epidemic as people who have taken Percocet or other drugs for pain, even after dental surgeries, have become addicted to these medicines. This is a non-addictive medicine because it's a non-opioid that can treat pain. So it's a substitute for opioids in patients after surgery that experience acute pain. So it again addresses a large unmet need in the market, which is truly an exciting development. So I'd like to talk about a therapeutic area. I have two of them I'd like to talk about today where exciting developments are occurring. One is oncology. And typically when you think about drugs to treat cancer, you think about radiation, surgery, or chemotherapy. A lot of these treatments are non-specific. And this is 6 new technologies that the industry has developed to develop drugs specifically for cancer that are more specific and have developed significant results, all of which have shown proof of concept and shown benefit in both responses and delaying progression of cancer in patients and ultimately survival. And in fact, in 5 of these 6 buckets, drugs have been approved utilizing these technologies, which is super exciting for patients. Ultimately, we want to find a cure for cancer, but a valiant goal is to have patients live longer and be able to function on therapies and extend their lifetime, as opposed to still having a terminal illness. It's always great to have a few more years with your family. So some of these therapies, cellular therapies and bispecifics, antibodies, harness the immune system. They target certain areas of the immune system and stimulate them so that the body can kill the tumor on their own. Antibody drug conjugates are a combination technology that are a targeted delivery of chemotherapeutics directly to a tumor, as opposed to systemically delivering it to the body. And there are 3 other technologies I've listed here that I'm happy to go into detail during the Q&A if you'd like. Central nervous system disorders are another key area of unmet needs for patients. Both neurology and psychiatric disorder are large market opportunities for drugs to be developed in. Antipsychotic therapies in the upper left here are drugs that tend to treat bipolar disorder and schizophrenia. The companies listed in each of these boxes are developing drugs for the categories that we've listed here. It's just representative of some of the companies in the space working on these disorders. Depression is pretty self-explanatory. Epilepsy and pain, I spoke about Vertex earlier. Neurocognitive disorders like Alzheimer's disease and Huntington's disease have companies developing therapies for them. Neuromuscular disorders like multiple sclerosis, as well as myasthenia gravis or Duchenne's muscular dystrophy, are areas where companies are developing drugs. And movement disorders, Parkinson's disease, tardive dyskinesia, as well as are key diseases that companies are developing disorders in today as well. Now, the stars next to the company logo are companies that the trust held at the time at the end of the reporting period, September 30th. So this slide, I talked about therapeutic areas. This slide represents kind of a toolbox of technologies and the next generation toolbox of technologies that some of the biotech companies are using to develop drugs. As an investor in the trust, you get exposure to all these technologies. You can see in the top row of bubbles the NAV exposure in the trust of companies that are utilizing these technologies to develop these drugs. The bottom circle is logos of the companies that are utilizing the technologies in the bubble listed above. Now, as managers of the trust, we do a bottoms-up approach. So we look at companies, we look at the drugs that are being developed, and we assign a probability of success. So we are less focused on investing in a specific technology and more on the probability of success and ultimately the financial profitability or future financial profitability of the company that's developing it. But we do have exposure to all these technologies, and you will be exposed to them as an investor of the trust. So developing drugs is great, but ultimately we need a federal regulatory agency to approve the drugs. And this is a graph of the number of drugs that the FDA has approved. CDER is the chemical drug division. CBER is the biologic drug division. So you can see the different drugs broken out by approval per calendar year. Starting in 2017, which was the first year of President Trump's first administration, you can see there was a significant increase in the number of drugs that were approved, and that high number of drugs approved has been maintained for the past 8 years. You can see 9 months to date. We've had 39 approvals, and we're on track to maintain the high level of approvals that we've seen in the last few years. So I talked about a tailwind in the sector for M&A in the space, and biotech companies are developing drugs. They tend to initially spend a lot of money before the drug makes it to market. Pharmaceutical companies, on the other hand, are expert marketers of drugs. And on the next slide, I'll talk about their patent expiries, but the pharmaceutical companies have started to have a significant patent decline, and they've looked to biotechnology companies to augment their revenue growth profile, and they've done acquisitions. Now, acquisitions happen. They're somewhat unpredictable on when they will happen, but we've seen a recent uptick over the last couple of quarters in both the deal volume as well as deal size. The box on the bottom left here, you can see some quotes from some large pharmaceutical company executives and their interest in M&A and looking to acquire biotech companies to augment their pipeline. And the box on the right is just a historical representation of some of the deals that BioG owned the target company that was acquired at a premium by a pharmaceutical company at the time. So as a investor in the trust, you get to experience the benefit of an acquisition if the trust owns that target company at the time of the announcement. I will also note the two recent deals that have occurred. They are listed in the bottom right of the box on the bottom right. Akero was acquired by Novo Nordisk, and Avidity Biosciences was announced to be acquired by Novartis, both in the month of October, and these were both trust holdings at the time. So I mentioned the patent cliff that pharmaceutical companies are experiencing and are going to experience throughout the rest of the decade. Here on the graph on the left, you see the branded number of sales that are at risk in billions by pharmaceutical companies by year. So as drugs, patents, and exclusivities expire, the sales decline. And pharmaceutical companies, we believe and we've seen, look to acquire biotech companies to augment and replace the growth as their products expire. The chart on the right shows some key drugs at pharmaceutical companies. It shows the annual sales globally that they had in just the last calendar year, as well as the year that they lose exclusivity. So the first drug on the chart, Keytruda, is a drug that sold over $29 billion last year for Merck, and it loses exclusivity just a few years away in 2028. So one unique feature of the trust is we are global investors. We don't just look at the United States where, to be fair, innovation has been for biotech and has been dominated by the United States. There is innovation in Europe. However, more recently, there's been an uptick in the innovation in China. And the graph at the top here shows the number of clinical trials that are ongoing by region. And I'd point to the green line that you can see increasing from 2014 all the way up through 2024 to 30% of all clinical trials occur in China. This is in excess of the 21% of trials that occur in Europe and 35% that are occurring in the United States. So the Chinese biotech market is growing, and we have taken notice of it and focus on it in particular. In fact, ever since 2015, the domestic biotech industry was made a priority by the government of China in their 10-year Made in China plan. And we've started to see really the follow through of these innovations increase. Now, what's unique about OrbiMed is we have 3 local analysts based in Shanghai and Hong Kong that help us source investments and research the companies on the ground. And we think that's a unique advantage to us, not only from looking at local investments, but also assessing the competitive threats that they may be to US and European companies. Now, many big pharma companies have started to in-license drugs. We've seen an uptick in that over the last 12 to 18 months. In fact, Pfizer earlier this year paid over $1 billion to in-license a drug from a company called 3S Bio for it's a novel cancer therapy that's in development. So the Chinese healthcare sector was also declining during the 2021 and through 2024. We've started to see a rebound in the sector during calendar 2025, but the Hang Seng Healthcare Index, which is graphed here, you can see is still down actually close to half its value from where it was just a few years ago. So we think there is still room for upside in China, and hence we make the investment to do research and dedicate a small portion of the portfolio to Chinese investments, which again we think is unique part of the trust and exposure that you get as an investor in the trust. So one other thing that happened in the space is there's always political aspects that occur. Frankly, there are political aspects that occur in the market as a whole, and the biopharmaceutical sector is no different. However, we think that the current U.S. administration tends to be supportive for the most part for biotech. President Trump, his administration is pro-innovation. He generally wants business to succeed. There has been reduced regulatory regulation. He wants a strong FDA, but an FDA that lowers hurdles for drugs approval and speeds up the drug approval process. He wants to take away some of the red tape in this process. And, for the most part, the Senate does support the biotech industry because they develop new drugs for patients and develop new drugs and treatments for citizens, especially for diseases that are in need. However, some of the uncertainties that have existed in the space, and I'll run through here, one of which is Robert F. Kennedy was appointed the head of HHS, and he is a known vaccine skeptic, and there was fear that he would stymie drug approvals and make the FDA process a little bit more onerous for companies. Well, he appointed Dr. Marty Makary to be the commissioner of the FDA, who is actually pretty reasonable and science-based, and we haven't seen a major impact to drug approvals during the Trump administration to date. That said, we did reduce and eliminate the vaccine exposure in the portfolio because we have and noted Robert F. Kennedy's vaccine skepticism before he was the head of HHS, and we don't want to take that exposure risk. Now, there's fear on budget cuts. That was a fear in the beginning of the administration, budget cuts across the whole government, including the Food and Drug Administration, and there was a fear that that would slow down drug approvals. Again, as I mentioned, to date, we have not seen the drug approval process slowed, and in fact, Commissioner Makary wants to approve drugs more quickly. At least that's what he said in his public statements, and we've started to see it at least early on in his administration. Drug price reform. So drug price reform is always a political topic. It's easy to call for lower drug prices as a politician. However, implementing that's a little bit harder. President Trump did introduce an executive order calling for most favored nation pricing of drugs in the United States. This probably would take congressional approval, yet um, pharmaceutical companies have started to negotiate with President Trump and reach settlements. In fact, we saw in September Pfizer reach a settlement with President Trump where they will have Medicaid drugs as meet the most favored nation status and will price drugs for the Medicaid segment of their business no higher than other nations. We've also seen AstraZeneca reach a recent agreement as well, and we think other pharmaceutical companies will follow along. Now, this is a great headline and serves as a win for President Trump, but in reality, the Medicaid business is a very small percentage of the overall business for the pharmaceutical companies. In fact, it represents less than 10%, and in some cases, less than 5% of their businesses. Tariffs are another issue that has occurred, not just at pharmaceutical companies, but across the market as a whole. In reality, cost of goods are a very small percentage of drugs, and we believe that a 15% pharmaceutical tariff on drugs manufactured in the United States is very manageable within a business for a pharmaceutical company. So I'd like to just close out with what our strategy and outlook is and why we're optimistic on the sector. First, from a strategy perspective, we're going to continue to invest in smaller cap companies over larger cap companies, and we continue to believe that there'll be a sector tailwind. And as interest rates decline, that will be a tailwind for the sector. We will also continue to look at China as an opportunity. We will maintain an appropriate level of exposure there and toggle the exposure as fundamental opportunities arise. We will keep gearing between 5 and 10%. That's our stated goal, to keep gearing there. We believe that the biotech sector has had unprecedented low valuations. The drawdown that we've seen over the last few years, we think creates a very significant opportunity from a fundamental basis. We think the companies are strong, and we think that this creates a unique opportunity to invest in the sector. We think this valuation disconnect is a disconnect from the fundamental innovation that's occurred in the sector, and I hope I've articulated that to you. Lastly, we believe that M&A will continue because pharmaceutical companies need to augment their pipelines and their revenue growth, and we believe that they will support they will put a floor on low valuations in the sector and look to buy companies at premiums to those valuations, which creates a tailwind for investing in the sector. And we believe that the political overhangs on the sector mostly have lifted, and interest rate reductions will be a tailwind. So I hope I've articulated to you why I believe this is an excellent time to invest in the sector and why we're excited about investing in the biotech space. And I hope you have an interest in the Biotech Growth Trust. And I will take a few questions here. I have a few on the screen, so I'll go through them in the order I got them. So the first question is, how much overlap between your holdings and those of your main investment trust biotech competitors exists? So I haven't run the numbers precisely. We look at companies on a fundamental basis. You can see our published holdings as of September 30th. They're in this deck that'll be made available to you in the appendix, and we also publish them in our mid-year report. I'm certain there are some overlaps, but we look at companies and look at fundamental investments where we believe there is the most upside. And you've seen our performance over the past 6 months, and we hope that that performance continues. And it's up to you to compare how our performance is relative to our peers. Everyone has a different investment strategy, and we think ours is a great strategy. How do you balance risk management with unquoted exposure and gearing? Do you see unquoted as a potential drag on NAV discounts? So we have very few unquoted positions in the portfolio today. It's a very, very small percentage. It's just a couple of 100 basis points of exposure. We don't really view it as a drag on NAV. And with regards to managing gearing, we look at investments in the space, and if we see good investments in the space and good opportunities and good upside for investors, we'll increase gearing as we see appropriate. But gearing is really there to allow us to be fully invested. Okay. Risk weighting, earlier stage and late stage opportunities, and how do you manage volatility in the sector? So I do have a slide on risk management that I can share with you, and exposure in names. So we look at companies and we fundamentally analyze the companies. Now, our typical position size is no more than 5 to 10% for a larger company. That tends to be less volatile. For a smaller company, we look to have exposure, in 1-3%. And we manage positions accordingly. Now, we also are very acutely focused on catalysts that are coming up in the space. And if there is a risk event, we look to reduce exposure in the name ahead of that risk event so that we don't put more than 100 basis points of risk into any foreseeable event, so we don't have drawdowns. As you can see, volatility is higher in small cap names. You can see that in the chart at the bottom relative to larger caps, hence the smaller exposure in general. Okay. Someone is asking, can you give an insight into what is meant by reducing regulatory hurdles in the context of the FDA? So I will give an example of that. And I'll give the example in the oncology setting. So a gold standard for running a clinical trial in oncology is to show that a drug can have a patient live longer. Well, in order to run that trial, you need to test hundreds of patients that get the drug versus hundreds of patients that don't get the drug in a controlled setting, and unfortunately, morbidly, wait until a certain number of patients die and prove that the patients that got the drug lived longer than the patients that didn't get the drug. That's the gold standard. There is no question the drug is improving survival. The FDA has allowed surrogates in oncology to approve drugs faster so they can get to patients faster, where the FDA will look at, and the company will study drugs reducing or shrinking tumors and look at the response rate of the drug. So how many patients had their tumors shrunk in each of the arms of the study, and the drug can make it to market faster while the study continues to run, and the company follows the patients for survival, and that they can then validate the accelerated approval for the drug. So the drug can make it to market faster based on showing that a tumor shrinks, but then they prove it with the survival. But while they're proving the overall survival, the drug's in the hand of the patients. I think I answered what percentage of the portfolio is in private companies, and have you considered introducing an enhanced dividend similar to one of my main competitors? We have a stated buyback provision, and we think that provides returns to investors, but ultimately a dividend is a board decision. So I think I've answered all the questions that are in the chat here. I'm happy to answer any more if anyone has any other questions. I'll give it 1 minute, which I don't see. So I hope I've provided an overview of why I'm excited about the biotech sector and why I think the Growth Trust provides a good opportunity for investors in the space. The tailwinds that exist in the sector are interest rate cuts, policy changes, political overhangs removed, as well as an increase in M&A that we're seeing in the sector. We've seen depressed valuations for a number of years, and we think that the gap between the overall market and the biotech sector will continue to close, and we're just at the beginning of the recovery phase. And on top of that, we're seeing a ton of innovation in the space with new technologies and new companies developing new drugs to treat patients with unmet medical needs. And that's something that we're very excited about. And we think that will generate revenue, which ultimately translate into earnings and share price appreciation in the companies that we invest in. So thank you so much for your time, and have a good afternoon.
That's fantastic, Josh. Thank you very much indeed for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of the Biotech Growth Trust PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.